Welcome back. Take a look at futures this morning as we are looking at a major week for markets this week. The markets right now indicating a decline at the start of trading. On Wednesday, we get the March CPI number out, the inflation data for the last month. That's followed by the PPI on Thursday. And then on Friday, the major banks will kick off the earnings season for the first quarter. This week's inflation data coming after Friday's headline number, which was better than expected in the March jobs report. The strong jobs report has investors concerned over the Federal Reserve's next move. Will the Fed cut in the face of strong hiring? The Wall Street Journal writing that the brisk hiring bolsters Fed's cautious stance on rate cuts. Joining me right now is Andersen Capital Management's Chief Investment Officer, Peter Andersen. Peter, great to see you. Thank you so much for being here. Even though when you strip out, that jobs number, you realize a lot of that job creation is actually going to foreign-born, not American citizens. Overall, the headline was good. Do you think that affects the Federal Reserve's thinking on rate cuts?
I think everything does right now, Maria. The Fed is in a very, very tough spot because of the immigration numbers. That's kind of a new twist, isn't it, with the data? So that just distorts more data for them, and I think they're going to have a very, very tough time. On top of that, we've got the specter of higher oil prices. So the Fed is not in an easy stroll. I think we thought the Fed was going to be very easygoing after these tremendous rate hikes, but it's not looking very clear for them. And I expect that they'll be very frustrated, frankly, for the next several weeks as they try to figure out just what the heck is going on with the economy.
I mean, I would imagine that, if we don't have rate cuts, we're going to get a sizable sell-off in the stock market. Let me bring Mike Lee in on that, because, Mike, so far, this market is expecting 3 rate cuts.
Yeah, Maria, to me, this is the remarkable part about the rally that we've had. We're up over 20% since the October lows. At that point, we were expecting 6 rate cuts. We've moved down to 3, and those 3 are looking a little shaky at the moment, yet here we are. So this leads me to believe this is more than just rate cuts. There's a lot of buying behind this market that doesn't look like it's going to subside anytime soon. Maybe we have small pullbacks here and there, but I think we're probably we're in the mid innings of a kind of extended bull market. What are your thoughts?
Peter.
Well, if you're asking me, I agree with you. Yes, I think, the rate issue is one thing. But since I can't predict which direction rates are going to go, I try to bypass the whole question by looking at stocks that might be immune to rate cuts. And I think there are several industries out there that look very, very promising and have continued. I mean, in the past, they were promising and they continue to be promising. So if you can kind of bypass the question of rate cuts, you'll save yourself a lot of frustration. So let me give you an example. Cybersecurity. That isn't going to go anywhere. And with the more recent announcements of some of these hackings by ransomware, I think that's a great place to play your major positions in a portfolio right now.
Yeah, I mean, I think when you look at national security, it opens you up to different ideas. I mean, are you talking about drone technology? Are you talking about border-related companies? What specifically, when it comes to security and national security, would you look to invest in?
Well, first off, I mean, we've kind of downplayed the past hackings that have happened. I mean, most recently, HCA, ransomware, and also we just learned that Reddit last month was hacked and it just went public. People are not paying as much attention as I think they should, Maria. And so I'm expecting, sadly, that there will probably be some high-profile national hackings this year. And how do you invest in that? I mean, it's a horrible thing to say that you can make money off that, but you can by investing in companies like Palo Alto, cybersecurity, Fortinet. And remember, these hackings, when you really look into this, these are not by highly organized groups. Instead, imagine this. It's some frustrated 20-something that is maybe upset that he got overcharged for a bounced check, but they're so smart that they can come in and hack a major bank. So those are some of the things, the scenarios that I think are indeed more likely now than ever. And on top of this, you throw artificial intelligence that we've all been very happy and excited about on the positive side. But once the hackers get involved with that, can you imagine the level of sophistication that they
Yeah.
will present to us. So
Well,
you can make
yeah.
money off that by investing in cyber stocks.
Totally. I could totally see all of that playing out. But let's take a look at what could throw this market off the rails, and that is inflation. Oil prices this morning are right now at $86.13 a barrel. That is down 90.9, which is almost 1%. But still, you're talking about oil now close to 90 again. Brent is already at 90. A lot of people say oil could potentially reach $100 a barrel again, Peter. And then, of course, you've got the CPI number out on Wednesday. It could be hotter
Yes.
than expected. Oil is, of course, underpinning lots of the inflation that remains elevated. So what are your thoughts on the data that's coming this week? And what do you do with Brent and crude right here at $90 a barrel again?
Exactly. So as Liz Peek had mentioned recently in her op-ed, this will present a speed bump to any of the Fed calculus that's out there. And as oil prices rise, certainly, there is going to be an interpretation of that as inflation. So once again, how do you avoid getting caught up in that argument? And I would say still you could invest in artificial intelligence stocks. I mean, we've all been fans of NVIDIA. I still continue to hold that. I think that it may be a little bit over enthusiastic about the outlook for that name, but I still am a core holder
Right.
there. So once again, if you can't figure this stuff out, maybe there's some ways to sidestep it so at least you won't feel the tremendous pain that others will. For instance, if you're a pure commodity investor, very, very difficult to call those the future of those prices.
Are you expecting a sell-off on a hot CPI number?
I think that the hot CPI number will definitely temporarily sell off the general indices,
Yeah.
but if it's still not going to do away with the threat of hacking. I mean, it isn't. And so whatever direction those interest rates go in, you still will have robust interest in those types of industries.
Peter, thank you. Peter Andersen joining us this morning on Markets. Your morning mover this